A good day to you. This is Ron Janish going to talk about how to select pivots, and we're going to uh, do it in a way that's very different than I've done before. In the past, I simply said, well, here's a formula, here's an exact mechanical formula that I could teach to a classroom of third graders, and they would all pick the same points. And all I would say is you start from the end and you go backwards, and you maybe if you use what I call the M1 formula, you just start at the end and go backwards. So for example, with this, you would have picked these pivots here for drawing this particular median line, which with perfect sight here, you can see picked off the high today in the S&P. Okay. Nice and easy. And if you say, you know, why didn't I take this point here or this point here or this point here or any of these other points? Real simple. If you look at daily bars and you know what M1 formula means, you would have picked those points, those 3 points that you see on the chart here. Simple as that. Like I said, you can teach this to a room full of third graders. And the reason I say it not to mean that it's simplistic, but I have to be able to do things in a way that I can communicate this stuff to a programmer, because programmers don't like subjectivity, except those that like to use artificial intelligence, and then you're always using a magical black box which can change its mind on a moment's notice. So this is the M1 formula in what we're going to talk about today is the formula that we'll be constantly be using. We will not use any other formula but that one. So if you've taken the course from me, you know what that is. It is so easy. Like I said, easy enough for a first grader, even a third grader. So, okay, so this is simply the ES. That's the example for today. And okay, to now let's move on to a little bit of history here. Okay, here we go. Okay, now if you remember, what we did was we did some testing, and what we found was it's not difficult to have intraday trading and then improve the results dramatically. And how we did it was we found an intraday system that we tested out, worked nice, 60% or so of the time it was profitable. The trades were. And we did different things to kind of help it along. Like one of the things we added was a feature where we said, well, gee, what if we have a max loss? And we tested different max losses, and we figured, well, $1,500 was the most horrible case max loss. And so we put that in there. Mind you, we could have had a different number, but we chose that one. Okay. And then what we did was we really stepped it up a notch or two. And we took all the trades that were there, and then we went up to a higher level in terms of time. So if we're using intraday, a higher level was daily, for example. So you looked at daily charts, and I'll show you the example of this in a moment. And we said, well, what 4 categories can we put this trade in? And we only had 4 categories. And so we did that. And what we found was we were able to dramatically increase the quality of our trading. And what we did was we had the 4 categories using the standard Andrews stuff, and I'll show you some of them in a moment. And then what we did was we said, okay, well, this category here, it'll be D, A, B, C, D. D for dismal, because nearly all the trades were losers. And then we had C for crummy, and they were pretty crappy. And then we had category B for much better than average, and A for absolutely amazing. Okay, so what we did was we just set aside the category C and category D trades. And So when we run across a trade overnight, we look at what category it's in, okay? And we know whether or not we're going to take it based on that category. Okay, so we did that testing, and then we added another criteria, what I call Gelt lines. Now, those of you that are fluent in German know that the word Geld is a very familiar word. It simply means money. And so we call them our target lines, or what we call Gelt lines. And we recently did a study, and he said, well, what happens if we simply take our intraday trades and only trade the category A and category B ones, right? They're the ones that are really good, and leave the crummy and dismal ones, and have the 1500 max, and let's see what happens from there. And we said, well, what's the difference between using the target as a, hitting the target versus close it beyond? And here's what we found in our, this is about a 15, 16 month study. And what we found was we were able to have some rather interesting results on the just making the line. The study concluded about a little under 200K was the profit on that, but 273 was closing beyond the line. So this is definitely worth it. Okay, and so so when you do studies, good idea to try out different things and find out what happens. What we noticed is that with the close beyond, it had less winning trades than just hitting the line. But that's okay. It's, a 4% difference. Who really cares when you can dramatically increase the profitability? So that's kind of neat. So anyway, we did that. And now we're going to get into some of the woods here and woods and weeds that we found along the way. One of the things we found is that with Andrews, there can be an internal bias when checking, when looking at trades historically, and even when looking at it for the next day. And we wanted to clean up that confusion on one of our categories. Actually, well, doing two. And let me show you what happened. So what happened was we did a historical study, and I'll show you the chart in a moment. And so we found here, this is a green one here. This is category, let's say B for much better than normal. And this is the other category. So this category here, SO and OPSO. This one here is a good one, and this one here is one worth avoiding. And sure enough, it did not make the target line. And sure enough, this one did make the target line. So that was a nice example. I'm going to show you those in actual reality, and then how we had to clean things up a bit. And so we can see that these here worked out. This was heating oil. Now, hardly anybody trades heating oil, but we're going to use that as an example because it's really a nice and messy chart. Let's see, HOZ19. Well, so let's do daily, and remember we're using the standard textbook, nothing fancy, pivot formula. Okay. Okay, so on an intraday chart, on an intraday basis, we had a signal here, and it was a sell signal, and sure enough, down it went. You can see that clearly on a daily. So what kind of things did we look at ahead of time that would tell us, hey, let's use this one and let's not use this one? And what were the traps involved? Well, you draw your recent median lines, and you can instantly see this is an SO right there. That if you're going to put it on a trade here, that this is obviously an SO. Okay, absolutely textbook. So, and the SOs are category 2, right? Okay. Remember, we're using an intraday signal with intraday stops and all that kind of stuff. Okay, but we have to get this blessing from the daily charts. Okay, and then so this one here, and it worked out nicely, as you can see. And so it did wind up going down and hitting the Gelt line, yes, as you like to call it. Then we had another one on, let me see, what was the other date? The other date was 11/18. Here we go. And so it wound up having a buy signal over here. And as you can see, this is definitely not an SO. It's the opposite, all right? So this one is, oh no, stay away, don't go long, don't go long. And it went down, 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 and we did not go long, long, long in our studies. So one of the, here's where the rubber hits the road. One of the problems that we had was determining, when you have this, when it's intraday and you're looking at this data here and it's going down, you might have a bias on the short side. Or even if you're doing historical studies, say, oh, I went down, I would have known that, yada, yada, yada. Well, let's do this as mechanical as possible. Okay. And the rule we developed was very simple. When looking at daily charts to determine intraday, okay, so the sell was here, down she went, you would have looked, the rule I developed for that makes it real simple, straightforward, and no BS possible that I can see, is what you do is you say, okay, well, if I'm going to do an intraday trade on this die here, let me look at the data up to here. So up to and including the day before, not more. And we wound up doing the same thing here. Okay, what was, yes, here we go. Wound up doing the same thing here. Up to and including the day before, not more. And this is how we resolve that problem. So in addition to knowing exactly where a turn would be, or exactly where we would draw the lines from the pivot points, as a reason, using the course methods that we teach, it also is a way, this is also a way of knowing the exact criteria as to when you draw your lines and when you make that determination. And one little thing here as a sideline, I discussed this particular, the approach of the 4 different categories with somebody from down under. John, he's been a course member for eons. And And his initial response, without me even explaining to him any of the things we were using or whatever, he says, "Oh yeah, that makes perfect sense." And he says, because what you're doing is you're looking at that higher level in time frame for guidance and direction. So in other words, we're to a certain extent going with the trend that's already been established by the higher level time frame. Okay, so that's one explanation of it. Mine's a little different, but because I'm using exact mechanical stuff, but I hope this gives you some insight in terms of what we're doing. And it's November 4th today, and by the way, if anybody is interested in the mechanical technology that we use, in the videos that we have, in the 800 some odd pages of original Andrews material, this is the original stuff. We have it available for you. And also, if you are interested in being on our private mailing list, where every week or so you wind up getting an email and it gives you some insight. On Monday, we sent out just a simple little thing that you saw what my exact positions were. And by Tuesday or day after, you could see what happened. Okay, since I remember I'm doing the intraday thing. And sometimes we'll send out charts and other things. I don't send out a lot of emails, just don't have time for it. So if you'd like to be on the private email list, let me know. Just send an email to ronjanisch@gmail.com, and that is spelled RONJAENISCH. That's how I spell it. Other people spell it differently. RONJAENISCH @gmail.com. Spell it differently and it won't get to me. Okay, so I thank you for your time and see you next time.